Welcome. Thanks for joining us for January. We're going to do the home buyers edition, and today, Mr. Tim gets the last laugh. I give him a hard time about his college football team, but he is getting the last laugh. So his team is in it to win it.
It only balances out because that Saturday after Thanksgiving, we lost to a certain team. I can't remember who it was, and it was absolutely miserable. So excited to be able to root for them in the national championship on Monday. And by the way, speaking of Ohio State, I am soon to be First Home Mortgage's first Ohio licensee.
Oh.
My license is approved. We're waiting on a couple other things to iron out. Soon, I'll announce whether or not it's official that I will be licensed in Ohio.
Okay. That's good. Congratulations.
Thank you.
So Mike, we're going to skip the dad joke in lieu of the dad joke. This is what we're going to do. You get 2 seconds to think about it because I want everybody at home to think about it too.
All right.
Because of college bowl season, you have to name your favorite, not the best, your favorite college player of all time. Just one. You get to pick just one. Audience, think about it because you've all watched college football. You all watch the local teams and you know who your favorite players are. Mm-hmm. And go.
Troy Smith.
Troy Smith,
quarterback, Ohio State, was on the team with Ted Ginn. The 2006 game where Michigan was 1 and Ohio State 2 or vice versa. He won that game. He was awesome, won the Heisman. Not a very good pro, but great player.
That was a good one because it was very, very college-oriented there.
Yeah. Oh, very college-specific because he didn't have a very good NFL career. Did play for the Ravens, though.
That's right. Didn't he? Wasn't he wide receiver for a minute or two?
No, you're thinking of either Braxton Miller or Terrell Pryor. They both transitioned wide receiver. Troy Smith tried to make it as a quarterback, just didn't work.
Yeah. All right.
Yeah.
Okay.
How about you?
My favorite, and this is college because the guy kind of ended up being not a good.
Can I guess?
Yeah, go ahead.
Paul Puzzlesny.
Paul Puzzlesny. That's a good guess. That was a good guess. But my first in-person game, LeVar Arrington.
He was so good.
When I saw him, that was my first game I ever attended. He caught an extra point. He hopped over the line and grabbed the extra point. Like, I know later on he had issues, whatever, in the Redskins, and he had some stuff going on. But as a college player only, like, it was fun to watch.
The LeVar leap. I mean, I remember being very excited about him going to the Redskins. And he did have a few really good years.
He did.
Yeah.
He ended up being kind of a goofy character off field. So that part, I'm leaving it aside, and I'm just sticking to his college career. The things we're actually talking about today. We're going to do the big three, and then we have a bonus topic because the January is going to be what we kind of expect for this year. And we're not shock jocks. We're not. I'm not going to take a crazy wild stance and make some bold predictions just to get some clicks. That's not at all what we're doing here. We're going to go over what we actually think is going to happen based on the historical data, what we're seeing from experts and information, and in our experience. We've been at this for a very long time. Yeah, combined almost 20 plus years. So this is what we're going to pull from. Yeah. The big three is going to be interest rates, home values, and inventory. That's what we get the most questions about. That's what pertains to most buyers, and that's what they want to know the answers to. Yeah. So if I can start, I'm going to start interest rates. You'll be more of an expert on interest rates, but I'm pulling from like the podcasts I listen to and the experts and even like the Feds and all the different information I'm pulling from. And it appears like the Feds are going to make some cuts. We're not sure how many because the unemployment and inflations aren't really where they predicted, but we'll see a few cuts, but it's still going to be at the best high sixes, low sixes at best, even after cuts.
So if you had asked me a few months ago, we thought
which I did actually.
You did.
Yeah,
on this video. Actually.
Go back and look.
That the Fed would have consistent rate cuts throughout 2025. And then we had a couple inflation prints and jobs reports that were just not what the Fed is looking for. It seems like inflation's a little sticky. The job market isn't necessarily losing traction. The labor market is strong. Retail sales tends to be up, although today we got a report that suggests otherwise. So things are almost too stable for the Fed to cut rates. They kind of have to have a hold off, wait and see approach, which in turn is kind of how the market is viewing this new administration as well. Yeah, true. So we're kind of in this frozen, and not because it's 20 degrees outside, but this interest rate frozen time frame where it can't go really up or down because it's just such a wait and see time frame. What I'll say about interest rates is, and again, we've said on this before, we don't get political.
No, we can't. There's no reason.
What this administration does believe in is deregulation of banks. Jamie Dimon, the CEO of Chase, he had said, or JP Morgan Chase has said that they are so overly regulated that a lot of these banks cannot lend, cannot spend, cannot invest the way that they really should be, because they have to keep so much liquidity, they have capital requirements, and they're so regulated.
Gotcha.
So if there's banking deregulation, that means that banks can they have a balance sheet that they can invest in mortgage-backed securities. Mortgage-backed securities are in your pension funds, your 401ks, mutual funds. It's a very low risk asset to have in those, but banks haven't been able to purchase them because they just have to keep so much money. Yeah. So if there's banking deregulation by this administration, banks don't have to keep so much liquidity. They can invest in mortgage-backed securities. What does that do? That lowers rates. So what I had read was about a year from now, the expectation is for rates to be somewhere around 6%, but we're about 1% higher than that. Yeah. We're roughly, let's just call it 7%. If deregulation starts to happen, then they'll be able to buy mortgage-backed securities. Maybe we see 0.25% to 0.5% bump from that and some other things. But it's going to take time.
It's going to take time. So nothing anytime soon. So where you're at now is going to be where you're at.
I would say so, yes.
The next non-surprising thing we're going to say, but we're going to say it anyway, is our inventory is going to stay pretty level. Yeah. We have lots of folks that are like in 3% interest rates, and they're just making it work, right? Mm-hmm. A lot of people that are having children and having the things, and usually those are the folks that, make that next move up, just kind of sitting still. They're just like, hey, we're good here. Let's just put a bunk bed in. Yeah. Let's just figure this out. Yeah. So we're seeing a lot of that, but we're also seeing lots of like boomers. And I've seen that especially through our top producing agents in our company. They are also of the age of like 55 plus, not to put their business out there, but they are the ones doing well because that's their age group and that's who they are and that's who their friends are. Mm-hmm. And it just seems to be that that's the group that's doing a lot of selling. We're probably going to see a little more first-time buyers getting used to it and budgeting properly. Yeah. And they'll be out there a little bit more because last year was historically low for first-time buyers.
Absolutely.
And so we're going to see everybody just adjust and get used to the rates, and it won't be a frenzy. It'll be what a typical pre-COVID market will be. Yeah. And the numbers will just be historically average. I don't think anything crazy is going to happen based on what I'm saying. It's just going to level out and just kind of go on a merry way.
I would almost equate it to 2018, 2019. It was a very balanced market. Rates started to spike in late 2018. Yep. They went from rates in the 3s to, I remember I did my first 5.25, and it was like, oh my gosh, this is crazy. People would absolutely jump at that opportunity right now.
They would.
But there is a phenomenon to these rates settling in. Yeah. At first the shock, let's just call it 2 years ago, when rates spiked very quickly. There were a lot of people that said, let's just wait and see.
A lot of wait and sees.
Remained longer than I expected it to. That remained to the mantra, especially amongst first-time home buyers or move-up buyers, to say, let's just wait. Maybe rates fall, maybe home prices go down. Well, the latter ain't happening.
No,
we'll talk about that in a second.
Yeah.
And now that rates have stayed there, people are in a life decision. I need to get out of my parents' basement, or I need another bedroom, or I need the garage, or I need the new zip code. And it's whatever the rate is, I have to do it now. I've waited long enough. Let's do it. So that phenomenon, I think, will continue to happen throughout this year because it's settled in that this is just what it is.
It is, yeah. And I think a lot of people are just making adjustments to their budgets. Mm-hmm. Sure. Really, instead of buying the whatever, and spending a little extra, they've just been cutting back and doing the essentials. Mm-hmm. And I think the Wall Street Journal just put out some numbers about inflation where it's kind of leveling out as well. And I think a lot of people are just going to be not going above and beyond anymore. They'll just do what they need. And the budgets will just adjust a little bit.
We did get a retail sales report today that was below expectations, which is actually for December. And if you think about December, it's a huge consumer month.
Yes.
So that tells me that in a month where we expect the American consumer to go crazy, they probably had to make some concessions and maybe not spend like they have in given years, or at least beneath the expectations of the market. So maybe the pain is starting to settle in, and credit card balances are through the roof, and they just don't have any more room to spend. And is that a bad thing? Of course it's a bad thing. But that means that the American consumer has to have a realization of what's most important.
And whether they do or not, it's totally
true. This is true. Yeah.
And then the final one's going to be, before the bonus, the final one's going to be values. And then if I go first with values, they are worth the home sellers aren't going to backpedal. Right. They see what their neighbor sold for. They saw what their guy on the street sold for. They think their house is top notch. Everything's nice. So they're going to stay where they're at. These values are where they are. We're probably going to see a more mild increase for the next few years. I think a lot of the things I'm seeing are like 2 to 3% over the next couple of years. The values are still going to go up, but they're not going to spike like they were. So the neighbor sold the house for 400,000. Don't think they're going to turn around 2 weeks later and drop it to 300 unless something crazy in their life's happening. The house is going to be worth 400,000. It'll appraise for 400,000. And then you just got to play the long game. You just got to be smart. When we go to look at houses with you, you have to be smart. What's your plan? I'm going to be here for 5 years. I'm going to be here for 7 years. I'm going to be here for 10 years. What is your plan? We have to make sure that we make the proper adjustments for your life. As a matter of fact, I just saw that NAR released that since 2000 to now, the average homeowner has held onto their house for 9 years.
Oh, wow.
Whereas before that, it was a maximum of 6 years.
Okay.
So people are staying a little longer. They are building a little more equity. They do have a little more wealth now, and they're just playing it a little bit differently.
Yeah. I think that in our area in particular, because when you have a NAR release their expectations for appreciation values, sometimes it's a nationwide number.
So it throws it off.
It's an aggregate that we could be below or beneath the mean. In Southern Maryland, it's a very simple. I've talked about it many times before. It's a supply and demand thing.
Yes.
If you break it down by county, Charles, there's a lot more new builds going on up in Charles County.
There's a lot.
A little bit more in St. Mary's County. Virtually none in Calvert. I mean, drive around this county. Schaefer Homes, plug Jimmy Schaefer. He's got some stuff going on. But for the most part, there's not much. There's some QBH townhomes going up in Prince Frederick. That's it. There's not much.
Not a lot.
And it's not like there's this mass exodus from Calvert County where there's people that are selling their homes and not needing replacement inventory. For the most part, if you live in Calvert, you're selling a home. It's either a move up purchase or move down purchase. They're staying here. That means it's a 1-for-1. They're selling a house, but they're taking up another unit of inventory, and there's not the replacement inventory of new builds. So we should be, and again, this is just sort of my theory, we should be slightly above the national average in terms of appreciation, because we don't have the replacement inventory. Supply and demand is a huge deal here, and what you have is what you have. So it's a good place to put your money. Real estate certainly is a good place to put your money.
So that's it. So that's our three. Like I said, we're not shock jocks. We're not going to tell you anything crazy or that everything's going to be going, the world's going to turn upside down. You're going to make millions of dollars. That's not at all what we're seeing. We're seeing that everything's actually flattening back out, that we saw like the big spikes and the big drops. And now we're at the leveling part. So that's what we kind of expect this year.
Yes.
However, you've got bonus track. So if this is a Taylor Swift album, bonus track. I think the bonus track was the Pink album. I'm sure I'm going to get people commenting on that, but my daughter just got one for Christmas. So, so what Taylor did was she had the same.
Not Pink the artist.
No.
Taylor Swift has a Pink album.
Yeah. So what she did is she had the same record, and she did like a blue and like an orange and then like a pink.
Okay.
And she just resold them.
Got it.
But one of them.
We just lost half of our.
Yeah, it is. That's because I have a 9-year-old daughter. So apparently the orange one is the one that's got the bonus track, and so it's worth $20 more.
Oh, okay.
So she's a marketing genius,
she is a marketing
Taylor
genius.
Swift.
Yes.
If she could just start dating one of the Steelers instead of one of the Chiefs, so we can start winning some games, that would be great.
Automatic Super Bowl.
Bowl. So let's do it up, man. We have some players on our team.
Is TJ Watt single? I don't know.
No, but we can make him single.
Yeah.
I can make some calls. So
what I want to
track,
talk to you about, and I'm not an insurance agent. I want to make that very clear. But I've had a couple meetings recently with some very trusted insurance agents, principal agents here in the local area, because the insurance game is changing so drastically and really has started to change over the last few years. If you're a homeowner, you've probably noticed your premiums have gone up. Yeah. And why is that? It's because the cost to rebuild your house is more expensive than it was 5 years ago when you got your first insurance policy. It does not help our premiums that these insurance companies are having to pay out. And, of course, what's happening in California and the, Pacific Palisades, the hurricanes in Florida, very sad. So I'm shedding light on the cost of it. Of course, it's very sad. They're having to pay out a lot of premiums. Yeah. And a lot of claims, and very expensive claims. So these companies are being hit hard, and that translates into probably our premiums going up across the board because they've been hit with so many claims. The flip side of that is they've been hit with a lot of claims that maybe were not quite as necessary, And there are a lot of good roofers in our area. I'm not disparaging roofers, but there are some across the country, door-to-door roofing salespeople that say, hey, we just had hail. I can coach you through how to get a new roof written by a claim in your insurance company. And a lot of people are jumping at that opportunity to get new roofs. They are doing it. And again, I'm not saying any local company specifically, but generally speaking, some of these contractors are doing it cheaply. They're doing it with cheap shingles. They aren't doing 30-year roofs or 15-year or 50-year roofs. So these insurance companies are kind of in a tough spot with all these roof claims that they're having to put out there.
I wouldn't have guessed.
A few things. One, if you ever do submit a claim to have a roof replaced, just make sure that the roofing contractor you're using is of quality and that they're actually using the supplies that you agreed upon. That there's a tinfoil hat theory from one of the insurance agents that I do a lot of business with, that they can say that they're using a 50-year shingle and then they go very cheaply on it, and all of a sudden you have a cheaper roof than you expected, and they pocket the difference. Okay, do I subscribe to that? I don't know.
I don't know.
What I really want to hammer home is that everyone stop paying so much attention to how cheap your premium is and pay attention to the coverage. The percentage of homeowners in America that are underinsured on their house
probably
is
high.
An epidemic. And what just happened in California, it should be a wake-up call. If you were to, God forbid, have a house fire, you want to make sure that you can build the house that you had or a house that you would want with the replacement coverage that you have. A lot of it's deficient. If you have a $250,000 replacement coverage, can you build the house you currently have for $250,000? Probably not.
Not a chance.
So just, again, the number that we always go to when we get a policy is how much does it cost? I understand why. It's a tough time. Cost is important, and that goes into your mortgage payment, which is the number one bill that everybody pays the most attention to. But please, I implore all of you that are listening that currently have homes, look at your coverage, look at it deeply, talk to your agent about it, make sure that if something bad happens that you're covered, because I'd hate for you to be in a position that something bad happens and then the next level is all of a sudden you cannot build the house that you had before.
Yeah, and if you need access to roofers, contractors, and things like that, of course, with Live Local, we have connections with all the local businesses that are we've used over the years that are honest and trustworthy.
Yeah.
So if you ever need anything, let us know.
And sometimes the trade-off is low premium, high deductible, low deductible, high premium. And sometimes people will go with the high deductible. Okay, well, if you then do have a basement flood, your sump pump fails and you have a basement flood and your premium or your deductible is $5,000 for something like that, first of all, are you aware that this project is going to cost you $5,000? It's not just a claim. You're going to have to put a $5,000 deductible. Pay attention to all these things.
I would just turn my house into an indoor pool. just swap it over. So much easier. Put a little bleach in there. I think that's how that works.
Yeah.
Chlorine it up, and then all of a sudden we're good.
There's so much things, there's so much that can happen that for a lot of us, we're lucky enough for it not to happen. But again, the California stuff, the Florida stuff, the Asheville, North Carolina stuff, it should be a wake-up call to pay very much attention to your coverage and make sure that your family's protected.
Bonus material, look at that.
Yes.
Public service announcement. You ever watch the old G.I. Joe and The More You Know?
The more you know.
The more you know.
Yeah.
There you go.
I'm a mortgage guy, but part of your mortgage payment is your homeowner's insurance. So I'm involved.
Make sure you're covered.
Yeah. I'm insurance adjacent.
And even then, we're people. Like if something did happen to you with your house, obviously you come out to us, we can help you. Right. So knowing what your insurance is something he just does just because he's a good person.
Yeah.
Just because we're here to help you every part of the way.
And we have good local contacts.
Yep.
If you're with one of these big box companies that don't have a really good agent assigned to it, it's more of a call center. Maybe take the time to consider going local because they can walk you through the coverage and talk. I mean, it's the language on an insurance policy on a declaration page. It's not a language you speak on a day-to-day basis. So you want somebody that's really professional to walk you through it. If you need a contact, we have several. Feel free to reach out.
There you go. That's what 2025 is going to look like for us. We went over the interest rates, the home values, the inventory, and then provided bonus material on your insurance as well.
There we go.
We're a one-stop shop here today.
The dad jokes are back in February.
Yeah. I just wanted to go over the college thing. I thought it'd be kind of fun. Hopefully you came up with your favorite college player too.
Yeah.
There's a list of them though. There's a lot of that big list.
I try not to go recency effect because there's a few recent Buckeyes that I absolutely adore. But I think for Troy Smith, especially at the time and the age that I was, had a huge impact on me. I'm mean, I was a junior in high school, so
another one when I was a kid growing up that I liked. This is number 2. Was Rocket Ishmael.
Rocket Ishmael. I thought you were gonna say Kanjana Carter.
No, Rocket Ishmael. He was fun. He was a terrible NFL player. Terrible.
But I think he had 98 speed in Madden.
Yes, yeah, probably. The old Madden where they're all boxes.
Yeah.
All right, folks, thanks for everything. We have coming up soon, the gym crawl is going to be January 25th, and then after that one, it's going to be the cupcake competition on February 8th. We're always out in the community helping make our place a more positive place to live. So we're out and about. Follow us. See if you want to be a part of the next one, because we're always doing something, being proactive, and being a positive impact on our community.
I love it.
It's fun. We'll see you in February. Tim, hey, thanks for your time today.
See you in February.